Yesterday, the dollar Swiss tried to move higher in the early Asian session and then the European session, but then lost ground in the U.S. session as the fears of the conflict between Israel, Iran, and the U.S. started to dissipate, and also Fed's Bauman spoke a little bit more dovishly about Fed policy. That started to send the dollar to the downside, and we've continued that rotation today after the ceasefire announcement late yesterday. I'll talk about the technicals that are driving this currency pair, so let's get started. First, taking a look at the high price that we saw in last week's trading. That high price approached the 38.2% retracement of the move down from the May high to the June low. That 38.2 comes in at 0.8216, and as you can see, the price fell just short of that level before rotating to the downside. And trading yesterday, as I mentioned, we tried to move higher in the Asian session, then rotated to the downside, finding support buyers against the 200-hour moving average, and also this swing area. The 200-hour moving average is a green line in this chart. The price rotated back higher, could not get above the high price from earlier in the session, and then rotated to the downside, breaking below both the 100 and the 200-hour moving average. And this swing area was initially a floor through here, then it became a ceiling through here, before becoming a floor again right through here before we broke to the downside and trading yesterday right here. And that turned the bias from more bullish to more bearish, and we saw increased selling momentum to the close. And trading here today, we're seeing an increased momentum to the downside, with the price currently trading near the lows for the day and below the low price right here at 0.8088. That's going to be a little close support level or resistance level for the dollar versus Swiss traders. We can stay below that level and keep the bias out to the downside. Then the low price from June at 0.80554 becomes the next target. Now that June low that we saw right there, if I just take it back a little bit more, is still short of the low for the year. That low for the year came back here in April at 0.80386. So not only do we have the low price from the month of June, but we also have the low price from the month of April to aspire toward at 0.888055 and 0.80386. Those are our next key targets on the downside. Staying below the 0.80883 level would be the best case scenario for the sellers right now in the dollar versus Swiss currency pair. Just to give you a broad view of this pair and where we stand from a longer term perspective, the price fell below this floor area right through here, which was defined by different swing lows starting back here. You can even go back to here. But this was a floor area going all the way back to 2015. We had 1, 2, 3 separate different lows, and we broke below that level. We did move above it in the 6 or 7 or 8 or so weeks ago, but since that time the price has been below this level near the 0.8, what is that, 8331832 area. So staying below that level is more bearish. If we break below the low price that we saw in the month of April, we'd be trading at the lowest level going all the way back to 2011, folks. So the dollar versus Swiss is definitely under pressure. So that's my technical look at this currency pair. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.